Welcome, everyone, to our webinar. Today, we will be presenting on how to prepare for tax time, free tax preparation, and important updates for New Yorkers with disability. Sorry, I'm going to say that again. Welcome, everyone. Today, we're going to do a presentation on how to prepare for tax time, free tax preparation, and important updates for New Yorkers with disabilities. The audio for today's webinar is being broadcast through your computer. Please make sure your speakers are turned on or your headphones are plugged in. You can control the audio broadcast via the audio broadcast panel. If you accidentally close the panel, you can reopen by going to the Communicate menu at the top of the screen and choosing Join Audio Broadcast. If you do not have sound capabilities on your computer or prefer to listen by phone, dial 1-650-479-3207, event number 660-368-190. Real-time captioning is provided during this webinar. The captions can be found in the Media Viewer panel, which appears in the lower right corner of the webinar platform. If you want to make the Media Viewer panel larger, you can minimize other panels like chat, Q&A, and/or participants. For Q&A, please use the chat box or QA box to send any questions you have during the webinar, and we will direct them accordingly during the Q&A portion. If you are listening by phone and not logged into the webinar, you may also ask questions by emailing them to sbrown@ndi-inc.org. Please note this webinar is being recorded and the materials will be placed on the webpage www.realeconomicimpact.org/our-work/financial-counseling. If you experience any technical difficulties during the webinar, please use the chat box to send a message to Shahida Brown, Project Coordinator, or email her at sbrown@ndi-inc.org. With that, I'm going to turn it over to my colleague, Nancy Buteau.
Thank you so much, Shahida. Welcome, everyone. I'd like to talk to you a little bit about Empowered New York City. Empowered NYC is a groundbreaking new partnership dedicated to improving the financial stability of New Yorkers with disabilities and their families. The Empowered New York City collaboration is an initiative that will create, test, and promote new strategies to enable New Yorkers with disabilities to improve their financial stability. This initiative will advance financial capability through broad engagement and education, tailored one-on-one financial counseling enhanced with new expertise, outreach and tools, and specialized benefits support services. Oops, I went the wrong way, sorry. Thanks, Shahida. So I would like to introduce Wanda Lopez, Abby Meyerhoff, and Francis Liu, some of our partners who are with us today. And to kick us off, I would like to do that by introducing Wanda, who will talk to us about the New York City Office of Financial Empowerment.
Thank you, Nancy. So the New York City Department of Consumer Affairs protects and enhances the daily economic lives of New Yorkers to create thriving communities. DCA licenses more than 81,000 businesses in over 50 industries and enforces consumer protection, licensing, and workplace laws, ensuring truth in advertising and that New Yorkers are able to take paid leave for sick time to care for themselves or their loved ones. And this year, we're celebrating our 50th anniversary. Within DCA, we have the Office of Financial Empowerment, and that oversees the Office of the Financial Empowerment Centers, that are operating over 20 sites across the city, providing free one-on-one financial counseling to anyone who lives and works in New York City. There's no income limits. And last year, I think we celebrated our 50,000th client. So we're really excited to be a part of the Empowered NYC initiative. And we also, you're going to hear more about our New York City Free Tax Prep campaign, which is that OFE coordinates this tax coalition that operates over 200 sites citywide to provide free tax prep services. And Tatiana Williams, our guest speaker, will speak more about that as Urban Upbound is part of that coalition. So with that, I'll turn it over to my colleague, Abby Meyerhoff at the Mayor's Office for People with Disabilities.
Thank you, Wanda. So I'm just going to briefly give you an overview of what MOPD does. Founded in 1972, the New York City Mayor's Office for People with Disabilities works to ensure that New Yorkers with disabilities can lead happy, healthy, and productive lives. We're really working to make New York City the most accessible city in the world. We have programs and services for nearly 1 million New Yorkers who identify as a person with a disability. And one of our signature programs, which I'll explain in a bit, is NYC at Work, where it's our employment initiative, where we're working to create a sustainable pipeline that connects people with disabilities to meaningful living wage jobs across the city. Can you go back? Thank you. So just going to briefly talk about what the different areas that NYC at Work, MOPD focuses on. We work on transportation, education, access, health, housing, financial security, which includes Empowered NYC, and at the center, as I mentioned, is our employment initiative, NYC at Work. Those are our different pillars that really lead the work of MOPD. Thanks. And now I'm going to turn over to Frances Liu with Citi.
Thank you, Abby. Hi, everybody. This is Frances Liu from Citi Community Development. Now, for those of you who aren't familiar with us, we are the arm within Citi that leads our commitment to financial inclusion and economic empowerment for underserved individuals, families, and communities. We do this through partnerships with municipalities, with community organizations and nonprofits, and with thought leaders, and we aim to build and expand programs that ultimately expand economic opportunity for all. I'm so happy to be part of this partnership and be building on our longstanding work with the Office of Financial Empowerment to expand financial inclusion, and really to be here at the table with the National Disability Institute and the City of New York to be moving Empowered NYC forward and really bringing focus to and strengthening financial inclusion for people with disabilities. We at Citi are particularly excited about the topic of today's webinar. We've partnered extensively with the City of New York and with other municipalities and community partners to expand access to free tax prep services and the Earned Income Tax Credit. So very glad that today's webinar is focused on this important topic for people with disabilities, and looking forward to the webinar with you all. Thank you very much. I'm going to pass it back over to Nancy.
Thank you, Frances. So this is Nancy Buteau again, or if I didn't say it before, sorry about that. So National Disability Institute is a national nonprofit organization dedicated to building a better economic future for people with disabilities. We are the first national organization committed exclusively to championing economic empowerment, financial education, asset development, and financial stability for all persons with disability. NDI affects change through public education, policy development, training, technical assistance, and innovative initiatives. So as we kick off this presentation, why are we even having this presentation? Well, let's look at a few myths and facts about filing taxes. So sometimes people think that if someone has a disability, there is no need to file taxes. And the answer is that if a person's income is SSI, Supplemental Security Income, or SSDI, Social Security Disability Insurance, they may not be required to file taxes, but even if someone is not required to file taxes, they may qualify for tax credits and receive a refund that can help build financial wellness. And also, if a person has other income over a certain threshold, then he or she is legally required to file a tax return. So in most cases, it is very beneficial for people. Moving on to myth number 2. If I receive a tax refund, I will lose my disability benefits, such as my SSI or my SSDI. So I think it's very important for beneficiaries to know that the Social Security Administration does not count income tax refunds as income. And going above and beyond that, individuals who receive a needs-based benefit, such as SSI or SSDI, will have 12 months after receipt of that money to spend down their refund before it is counted as a resource. So it doesn't count as an income, and then it also will not count as a resource for 12 months. So that means people can go ahead and be comfortable in filing and know that their return will not jeopardize their benefits. And then lastly, the third myth. I don't have any children, so I'm not eligible for the Earned Income Tax Credit. And if you are between the ages of 25 and under 65 and earn less than $15,270 in 2018 by working either part-time or full-time, you are potentially eligible for that credit. For example, an individual earning $7,000 may actually be eligible for a credit of $519. So an individual earning $7,000 just for filing their taxes can get a credit up to $519. So I think we like those numbers. So having said that, I think it's very important that we have our presentation today on the overview of free tax preparation services and tax credits. And I'm so very happy to introduce to you today our speaker, Tatiana Williams. Tatiana is the Director of Tax and Income Support at Urban Upbound. And with that, I would like to turn it over to Tatiana.
Thank you, Nancy. I'm happy to be here today. Today, I'll speak a little bit about Urban Upbound and what we do, and about free tax preparation and important changes for taxes for the 2018 tax year. So the mission of Urban Upbound is to provide residents of public housing neighborhoods the tools and resources needed to achieve economic mobility and self-sufficiency, and to break cycles of poverty. Urban Upbound takes a multi-pronged approach with the following programs. Our financial fitness program, it includes budgeting, debt reduction, savings plans. The Urban Upbound Credit Union, where the members of the credit union actually collectively own shares in the union. We have workforce development, career pathways, and high school internship program. We have a worker-owned cooperative, and we have free income tax preparation and public benefits, or SNAP. Next slide, please. Last year, Urban Upbound prepared over 12,000 tax returns, operated in 22 sites, and we had total refunds of over $13 million, of which earned income credit was over $5,600,000. Through our free tax preparation services, individuals are able to claim the highest tax refund entitled to them. This money is then reinvested back into our neighborhood. Next slide. There are different types of free tax preparation programs. VITA, or the Volunteer Income Tax Assistance, TCE, or Tax Counseling for the Elderly, AARP, Tax Aid Program, there's IRS Free File, and there are tax software providers that where you can have free taxes prepared. Next slide. The VITA program offers free tax preparation assistance to people who generally make $54,000 or less, persons with disabilities, seniors, and limited English-speaking taxpayers who need assistance in preparing their tax returns. VITA is a smart alternative for New York City families who are often forced to pay high fees through paid services that can cost hundreds of dollars. Urban Upbound's free tax service serves people who make $66,000 or less. Next. So the benefits of using our tax services: all tax preparers are volunteers and IRS certified, providing quality tax preparation services. Taxpayers receive every dollar of their refund, eliminating the expense of paying for tax preparation. Tax preparers are qualified to prepare returns that include many credits and deductions, such as the Earned Income Tax Credit, Child Tax Credit. We can itemize deductions, self-employment income, and even for New York, the School Tax Credit and the Renter's Credit. Next. Providing free tax preparation services enables qualified working families and individuals to take advantage of the Earned Income Tax Credit and other favorable tax credits that provide an important lifeline in tough economic times and the ability to utilize every dollar of their tax refund, thus increasing buying power or allowing a means to start a savings plan. Next. In addition to VITA, the Tax Counseling for the Elderly TCE program offers free tax help for all taxpayers, particularly those who are 60 years of age or older, specializing in questions about pensions and retirement-related issues unique to seniors. Next. So there are types of services. There are different types of services that you can utilize at a VITA on a TCE program. You could come in person. That's where you sit with a volunteer and your taxes are prepared on site. There's facilitated self-assisted services, or FSA. That's where you sit in front of a computer and prepare your own taxes. There are volunteers that will assist you with the tax return. There's virtual, where you drop off your tax documents at a VITA site. Once the return is complete, you sign the tax return and the return is submitted to the IRS. There's drop-off service. Drop off your tax documents at a VITA site. Once the return is complete, you return to the site to review, sign, and submit your tax return. Services may differ by site. Next. So AARP Tax Aid Program is the largest provider of free tax services. They offer free tax preparation help to anyone. They specialize in individuals who are 50 years old and older. They understand that retirement or other life changes may mean your taxes are a little more complicated. They have locations in neighborhood libraries, malls, banks, community centers, and senior centers. AARP membership is not required for their services. Next. And to find the location of VITA sites, you can utilize these helpful websites. There's 311. You can actually call 311 or go to the URL, urbanupbound.org. You can come to our website, the IRS website, and AARP also has a website. Next. So there are some important changes for the tax year of 2018. There's the elimination of the personal exemption. The deduction for all personal exemptions is suspended, it's reduced to zero, effective for taxable years beginning after December 31st, 2017 and before January 1st, 2026. Larger standard deduction increases. The standard deduction for taxpayers who do not itemize deductions has more than doubled. As a result, most people will not itemize. There's a larger standard deduction for taxpayers who are 65 and older or are blind. For 2018, the additional standard deduction for taxpayers who are 65 and older or blind has increased. Next. New York State taxes. In 2018, there's a New York itemized deduction. So beginning with tax year 2018, the tax law allows you to itemize your deductions for New York State income tax purposes, whether or not you itemize your deductions on your federal income tax return. There's a new form called IT-196. Next. The real property tax credit. You are entitled to this refundable credit, which means even if you don't owe any taxes, you can get a refund. If your household gross income is $18,000 or less, you occupied the same New York residence for 6 months or more, you were a New York State resident for the entire year, you cannot be claimed as a dependent on another taxpayer's federal income tax return, Your residence was not completely exempted from real property taxes. The current market value of all real property you own, such as houses, garages, and land, was $85,000 or less, and you meet all conditions listed under either homeowners or renters listed on the next slide. Next. A homeowner, you or your spouse paid real property taxes. Any rent you received for non-residential use of your residence was 20% or less of the total rent you received, and you're considered a renter if you or a member of your household paid rent for your residence. The average monthly rent you and other members of your household paid was $450 or less, not counting charges for heat, gas, electricity, furnishing, or board. So how much is this credit? All members of your household are under 65. The credit can be as much as $75. If at least one member of your household is 65 years or older, the credit can be as much as $375. And you can claim this credit on IT Form 214. Next. There's the New York City School Tax Credit. And again, this is a refundable credit. And you can get this credit if you are a New York City resident or part-year resident, cannot be claimed as a dependent on another taxpayer's federal income tax return, and had income of $250,000 or less. And the credit is if you're a married person filing a joint return up to $125, or other taxpayers up to $63, and you'll file that on Form NYC 210. Next. And there's the New York City Enhanced Real Property Tax Credit. And you're entitled to this refundable credit if you had household gross income less than $200,000, occupied the same New York City residence for 6 months or more, were a New York City resident for the entire year, could not be claimed as a dependent on another taxpayer's federal income tax return, had a residence that was not completely exempted from real property taxes, and meet the conditions as a homeowner or renter. And that's the same conditions as the other credit. Your homeowner, if you or your spouse paid real property taxes and any rent you received for non-residential use of your residence was 20% or less of the total rent received. As a renter, you or a member of your household paid rent for your residence. And this credit could be as much as $500, and that's Form NYC 208. Next. So this tax season is scheduled to begin on January 28th. The IRS made that announcement. No returns will be processed by the IRS until January 28th, so review any terms of agreement carefully for companies offering an early return. Taxpayers will receive their tax refund approximately 21 days from when the IRS receives the tax return. If you're eligible and are claiming the Earned Income Tax Credit or Additional Child Tax Credit, your return will be delayed. By law, the IRS cannot issue refunds before mid-February for filers who claim EITC or ACTC. As a result, paid preparers are marketing express refunds, advances, or refund transfers that result in smaller refunds or unforeseen fees or interest. Next slide. So before we go, I want everyone to know that the government, we know that the government is shut down, but the IRS has announced that they are committed to ensuring that taxpayers receive their refunds, notwithstanding the government shutdown. They understand they're recalling a lot of the IRS agents to the workforce as part of the government shutdown to work. They're calling them back to work, and that everyone should be confident that their tax returns will be processed and their refunds should be timely. Thank you. If you have any questions, please contact me at Tatiana@urbanupbound.org. And at this time, I'll return it back to Nancy.
Thank you very much, Tatiana. What great information, and very good to hear that some of those IRS folks are getting called back to work. I'm sure that's putting people at ease. We do have a few questions that have come in, so we're going to keep Tatiana's name up on the screen for a minute, and I'm going to ask you about a few questions that came in. So the first one is, can you mention again, volunteer income tax assistance is for people who make what amount of money or less?
So generally it's $54,000 or less. And I know I mentioned that Urban Upbound, we will process returns that are $66,000 or less. And that's because we partner with some facilitated self-assistance sites, and the income limit there is $66,000 or less.
Great, thank you for that. And then the other question is, does every VITA site, you had talked earlier about you can get services in person or facilitated, self-assisted, or virtual, or drop-off. Do all VITA sites use those 4 methods, or does somebody need to call their local VITA site first?
Right, you have to check with the VITA site first to see which method is utilized. You know, many of them use the in-person, but you'll check directly with the site.
Okay, great, thank you. We do have a few other questions, but I also want to make sure that we give Michael time. So having said that, I would like to turn the presentation over to Michael Rausch, and I apologize that we don't have an introductory slide for him. Michael Rausch works for National Disability Institute and is also the director of our Real Economic Impact Network. He will tell you, I'm sure, that he absolutely loves taxes, and this is his favorite season. So he has some information for us specific to taxes and disability. So with that, I would like to turn it over to Michael, who's going to start by talking to us about Savers Credit and ABLE. Michael.
Great. Thank you, Nancy, and thank you all so much for allowing me to be here with you all this afternoon. As Nancy had mentioned, tax filing season is really a highlight of my work. I think I am a volunteer tax preparer and have been doing this for quite a while. And it's also an important time for the individuals that we serve to help them begin or advance their pathway to financial well-being. Tax season provides that opportunity where if we haven't had the conversation with an individual about or about financial empowerment strategies, now is a great way to be able to start that. I would also like to recognize Tatiana. It's always great to be on presentations with fellow tax preparers and those who are leading the work. I do want to share some additional information with you on some credits and give you some additional insight on why this is really an important time for individuals with disabilities. And for those of you who are on the call as practitioners, you know, having been out in the field as well, it's really our job to be able to give the individuals we serve information that they can use as they go in and begin to file their taxes. And some of the information will be a repeat, but I think it's important to reiterate. So first off, individuals with disabilities and their families may not think of the Savers Credit as a credit for them when filing their taxes. But in the upcoming tax season, the Savers Credit may be something to look further at if an individual is contributing to an ABLE account. I know you all have done a presentation in the past on ABLE accounts, but just to do a little review, an ABLE account, Achieving Better Life Experience account, ABLE account, is a tax-advantaged savings account for individuals with disabilities that allows the individual to save up to $15,000 per year in 2019. These savings are protected in an ABLE account and will not affect eligibility for most needs-based benefits or means-tested benefits such as supplemental security income, SSI, Medicaid, SNAP, also known as food stamps. So an ABLE account is really an important piece for us to look at. And so looking at the Savers Credit is a tax credit for making eligible contributions to an IRA or an employer-sponsored retirement account. And beginning this year, or the tax season, if you are a designated beneficiary, if you are the owner of your ABLE account, then you may be eligible for a credit for the contributions to your ABLE account. And this is really important, this particular credit for an individual who's contributing to their ABLE account. And the maximum credit amount could be up to $2,000 or $4,000 if married and filing jointly. So an important piece to keep in mind. This month, National Disability Institute will be distributing a quick reference guide that provides more information on the Savers Credit and ABLE and how to incorporate this information into your VITA program. So be on the lookout for that. The Earned Income Tax Credit, I want to talk a little bit about that. The Earned Income Tax Credit is an important tax credit for individuals with disabilities to keep in mind. As Nancy had mentioned at the beginning, oftentimes individuals think that the Earned Income Tax Credit is only available to someone who has children, but that is not the case. The Earned Income Tax Credit is a refundable tax credit. The key word is refundable here, is a refundable tax credit that reduces or eliminates the taxes that low-income working individuals and families pay. Of course, the Earned Income Tax Credit is administered by the Internal Revenue Service, and for an individual to receive the Earned Income Tax Credit, of course, they have to file a tax return. And so that's really an important piece to know. Great. Thanks for advancing the slide as I'm trying to do it. So I want to share with you a little bit about the eligibility for the Earned Income Tax Credit. And so to be eligible for the Earned Income Tax Credit, an individual must have earned income. The key word here is earned, to have wages. So if the individual has earned income, then they must be between the ages of 25 and under 65. They must have a Social Security number, and the income thresholds vary by filing status and number of children if they have children. And as Nancy mentioned at the beginning, I just want to reiterate this, is for an individual who is single, the individual must have earned no more than $15,270 in the calendar year if they're single with no children. And they must have earned no more than $20,950 if married without without children. Of course, it changes if the individuals have children, and we're going to share with you a website that you can go and get more information to look at if an individual is single and has 2 children, 3 children, etc., or if they're married and have children. But again, the Earned Income Tax Credit is really an important tax credit to keep in mind. Oftentimes, individuals with disabilities aren't familiar with the Earned Income Tax Credit, and so this is really an important piece to share with them. The Earned Income Tax Credit really is an important tax credit because each year it assists in lifting millions of Americans out of poverty. And it's been labeled as one of the most effective anti-poverty programs set up by the federal government. Actually, Shahida, if we could go back for just a minute. Yep. Great. Just a couple more things I want to share about the Earned Income Tax Credit. We don't have it on a slide, but it's really important. As Nancy had mentioned earlier, oftentimes individuals with disabilities are afraid to claim the Earned Income Tax Credit or to get a refund, thinking it will impact their eligibility for a needs-based benefit. But as she mentioned, and again, this is what we hear over and over within the field, is it's important to reiterate to the individuals that they do have 12 months to spend that money down before it impacts their public benefits. The other thing to keep in mind about the Earned Income Tax Credit and or refund is that the money could be direct deposited into an ABLE account, the Tax Advantage Savings Account, if an individual has an ABLE account. Then it would not impact, of course, the individual's eligibility for benefits. So that's something to keep in mind as individuals file their tax return is, as they have their tax refund direct deposited, they could, instead of putting in a checking account or savings account, they could have it in their ABLE account. Something else to keep in mind about the Earned Income Tax Credit is that if an individual did not claim the Earned Income Tax Credit on previous tax returns, they can go back up to 3 years to do an amended return and claim the Earned Income Tax Credit if they meet the eligibility requirements for each of those years. And the eligibility requirements are similar, except for the amounts, the threshold amounts are different. I just want to share a quick story with you that as a volunteer tax preparer, I've seen the positive impact of the Earned Income Tax Credit and doing an amended return on the lives of so many. And so, again, it's important to ask individuals if they did claim the Earned Income Tax Credit in the past and if they're potentially eligible. I assisted one individual in particular who I share this story quite often, but it was very impactful. A single dad, 4 children. He had not claimed the Earned Income Tax Credit in the past. He was an individual who worked but also received benefits. And as we found out that he did not claim the Earned Income Tax Credit in the past or some of the other tax credits, we were able to do a tax amended return, and the individual received nearly $15,000 in a tax refund. Again, even though that money took him over the $2,000 resource limit, he had 12 months to spend that money down before it impacted him. This was an individual where transportation was a barrier to work, to life, and a variety of things. And so he was able to use that money to purchase a new vehicle. So again, personal story, the importance of the Earned Income Tax Credit, and talking to individuals about it. The other thing I want to share with you is regarding the child tax credit. Oftentimes, folks may not think of this as an important tax credit, but it is. The child tax credit is an important tax credit that's intended to offset the many expenses of raising children. The child tax credit may be worth as much as $2,000 per qualifying child, depending upon an individual's income. For the new tax year, the maximum credit for qualifying child is $2,000, which is an increase from $1,000. And there's also the new dependent credit, which is a new credit for other dependents of up to $500 and is available for each dependent who doesn't qualify for the child tax credit. So important for us to keep in mind and be aware and share with the individuals that they work with to make sure that they share with the tax preparers to see if they are potentially eligible. As Tatiana had mentioned, that's why utilizing the free tax preparation services or the volunteer income tax assistance sites are so important, because as volunteers we are trained on looking at each of these tax credits and seeing what an individual is potentially eligible to receive. Couple more things to share here before I turn it over to Nancy is oftentimes we get the questions about disability-related questions about filing requirements, and that question that oftentimes come in is, do SSI is Supplemental Security Income, and SSDI, which is Social Security Disability Insurance, count as gross income. And as it was mentioned before, SSI does not count in gross income when an individual is filing their return. SSI counts if the individual or spouse has another source of the keyword substantial income. All right. Individuals may want to file even if they're not required to meet the minimum filing requirements, but we encourage them to file a return in order to receive the refundable credits like the earned income tax credit. But as a note here, remember that without earned income, the person is not eligible for the earned income tax credit or some of the refundable credits, refundable child credits. So important to keep in mind. Here are some resources to go to at the National Disability Institute website. If you click on Financial Wellness and go to Our Work, then or under the Financial Wellbeing time, Financial Wellness, I'm sorry, we just are updating our new website, so I might have the tab wrong. But if you scroll on the first one, I think it says Financial Wellbeing or Financial Wellness. Under that, you'll see a tab that takes you to taxes and tax preparation, and there's a lot of great resources that you can access. Oh, it's Financial Wellness / taxes. It's the second one. So please be sure to check those out. If you are a VITA program or you're a disability organization, you can access a variety of tools there that you can incorporate into your organization to share free tax preparation information to the individuals you serve. If you're a VITA program, there's disability awareness trainings that you can access there as well. And the last resource is the Get It Back campaign. This provides you a variety of information on the Earned Income Tax Credit, as well as outreach materials that you can download free of charge to be able to share with others about the Earned Income Tax Credit. So those are just a few resources. The last resource is not on here, but always go to irs.gov because you can get the latest information there as well. So with that, I will turn it over to Nancy.
Wonderful. Thank you so much, Michael. And what a great story about that single dad with 4 children working in on benefits to be able to get a $15,000 tax return. Just a great story. So thank you for sharing that with us. All right, so we have about 5 or 6 questions that came in, so I'm going to hold those till our Q&A portion. In the meantime, I would just like to go through a few more of our slides, the first being the action steps for the practitioners who are on the line today. Please share this information with colleagues and with the folks with disabilities that you're serving. We think that this free tax preparation services is very beneficial to individuals with disabilities, especially the Earned Income Tax Credit. And as Tatiana mentioned earlier, one of the things that we do see happening this time of year are ads from paid tax services, predatory paid tax services, letting people know that they can get their taxes quicker and more easily. And what happens is the predatory tax person winds up taking a good portion of a person's check as well. So we know that VITA sites and other sites are schooled and taught in how to work with low to moderate income individuals, and they really are great at being able to maximize somebody's tax return and do it in legal and ethical manners. So another action step for practitioners is to educate people who receive a public benefit that they have 12 months to spend down their refund. So for those of you who are not familiar what Social Security Administration does, specifically for folks who are on SSI, Supplemental Security Income, They look at the person's income each month, and it has to be under a certain amount. And that has meant that people have been scared getting a tax return because they were afraid that it would count as income. But that is not true. That is one of the myths that we dispelled before. It doesn't count as income. But not only that, as you heard Michael mention, it also does not count as a resource for 12 months. So when somebody gets a tax return and they're on government benefits, they have 12 months to spend their refund down before it counts as a resource. So there should be no reason that somebody would be afraid to file their tax return. And then also tour a VITA site to become familiar with how they operate. And then you can also start sharing the service with individuals with disabilities. You can always refer some of the folks that you're working with, especially those who are new employees, new to the workforce, or new reentering the workforce. VITA is a really great opportunity for them. And then, of course, places like Urban Upbound, where Tatiana is, not only offers VITA, but lots of other resources that can be beneficial. So please share this information with individuals. And we also want you to remember that we do have our counseling is up and running. So for all of you who have been on these webinars from the beginning, this is actually our 8th webinar. And starting last month with our 7th webinar, we were able to say that the program, the pilot, is up and running. And it is up and running and in full force. So people can get free and confidential financial counseling services. Not only are the counselors ready and willing and able, but they actually did start seeing individuals with disabilities, and we were really happy to hear the good stories that are coming out of the project so far. So to make an appointment with a financial counselor, you can use the link that's up on your screen. I'll also say it out loud. It is nyc.gov/empowered NYC. So anybody can go there and make an appointment with a financial counselor who has been trained in specialized disability benefit and support services. Moving on to contacts, you can always contact myself, Nancy Buteau, at National Disability Institute. Also, Wanda Lopez at the Office of Financial Empowerment. Crystal Rivera, who also works with Wanda at the Office of Financial Empowerment. And then somebody else that you heard from today, Abby Meyerhoff from the Mayor's Office for People with Disabilities. So we are here at your service. And having said that, we do have a few questions that came in, and they are not necessarily specific to you, Tatiana, or to you, Michael. So I think we'll just, you guys can both open up your lines, and we can just kind of, whoever, talks first. We can always have one person talk, then the other. You may have some separate ideas about certain things, but we do have some great questions that came in. And one of the first ones is, the person said, you mentioned when I can start filing taxes, but what is the deadline for filing? Good question. So either Michael or Tatiana?
Sure. So this year, the deadline is Monday, April 15th for most taxpayers. And because of Patriots' Day holiday on April 15th in Maine and Massachusetts, and the Emancipation Day holiday on April 16th in the District of Columbia. So taxpayers who live in Maine or Massachusetts have until April 17th, 2019 to file their tax returns to be timely. Now, you can also have an automatic 6-month extension if you take an extension by either April 15th or April 17th, depending on where you live.
Great. Thank you very much, Tatiana. And Tatiana, while I have you on the line, I think this one is more directed to you. And it's dependent care and the dependent credits. And did you mention that there was specific criteria for the dependent tax credits in New York?
So for the dependent care credit, that's where you pay for someone to take care of your child, or it can be a disabled person, regardless of age. If it's a child, it's under 13, and if it's a disabled person, it's any age. And it's so the parent can work or look for work.
Wonderful.
Did that answer the question?
Okay. I think it did. We'll see if anybody has any clarification that they need in chat. But that was great. Thank you. Another question, I guess this could be for either of you, is what is the minimum income level required to file taxes?
Okay. 1 second. So the minimum income level that you have to file, because
yes,
even if you don't have to file, you maybe should file. But let me see if I could grab that right quick.
And I'm so sorry to put you on the spot. I know that wasn't a part of your presentation, but it was a good question, so I just thought I would check and see. And for the person who asked that question, we can always get back to you at an earlier, or at a later time, if you just put your email in chat for us.
Yeah, it's I can't grab it right now. I thought I had it in my original presentation, but we can certainly get the income limits to you. And as I believe Michael said earlier, that information is available on irs.gov. But get the email address,
Great.
Nancy, and I'll be happy to answer the question.
All right, wonderful. Thank you, Tatiana.
Yeah, and this is Michael. Yes, so that was a very good question. And I'm thinking of the previous year amount. I will pull up. I think it's like, Tatiana, it's 10,000 something, isn't it? But I can't remember.
It is
10,006. But yeah, I'll look up quick and put it in the chat box.
Great, thank you. And Michael, I heard your voice, so I'm going to follow up with a question with you. Somebody had a question in terms of what would be the process for putting a tax return directly into an ABLE account. Would they talk with their ABLE account manager?
Yeah, so that's a great question. So if an individual has an ABLE account already, as they go to the tax site, I think there is a tax site checklist, and so you put in your routing number, your checking account number, your savings number. So it's important for us to add to that checklist to take your ABLE account number. Now I will share this, that in some of our partners have been really innovative when it comes to ABLE accounts during tax time, and a blog will be coming out highlighting those partners later this month. But during tax time, and those sites have a tax time savings program, is that they had ABLE enrollment, so at the tax site. So individuals were able to enroll in an ABLE account at the tax site and then have their tax refund deposited into their ABLE account. But you can also do a split refund where you use form, this is in the weeds, but 8888, and you could have a portion put into a checking account and a portion put into an ABLE account. So again, they can do it directly on the tax form. If not, once they get their tax refund into their checking account, then they can make the transfer to their ABLE account.
Thank you, Michael. And then it looks like we had a follow-up I just want to make sure I say this right. I may not say it right. Tatiana, I think it's for you. It's a follow-up question. The person says, same tax rules and dollar amounts apply for New York State residents, correct? I'm from Hudson Valley, New York, upstate.
The same tax, well, not for the New York City refundable credits. You have to live in one of the 5 boroughs, but the New York rules follow. There are some additional credits that you can get if you live in New York City that you don't get if you live in New York State. Some New York City specific credits you can get.
Okay, great. So anything on the presentation that said New York City is specific to New York City. The ones that were for New York State do apply to the whole state.
Correct.
Great.
Like
okay.
That extra standard deduction applies to, so the itemized deduction, that new form applies to the entire New York State.
Okay, great. Thank you very much. And then there's one last question, and I think it's a good wrap-up question before we get to our final slide, which is, how long should I keep my tax documents?
You know, the rule is, you know, I would say 7 years. Some people say 3 years, but I would say at least 7 years.
Yeah, I agree with
my
Tatiana.
opinion.
Yeah, I think that that's an important piece that we look at for a variety of things, and so we recommend that individuals do keep them for up to 7 years. And Nancy, I just want to share that I looked up the people who are required to file a return for 2018 if they have a certain amount of gross income. For single, 10,400. I was off by 200. If under age 65. So that's for individuals.
10,400. Great.
So Michael, that was last year. I actually looked it up too. For 2018, tax year 2018, for most people it's 12,000. Single under 5, it's 12,000. 65 and older, 13,600. Married filing jointly under 65 is 24,000. 65 and older for one spouse is 25,300. 65 and older for both spouses is 26,600. Married filing separately, any age, is $5. That's important. Head of household under 65 is 18,000. 65 and older is 19,600. Qualifying widow under 65 is 24,000. 65 and older, 25,300. And this incorporates the new standard deduction. Typically, you have to file if your gross income is greater than the standard deduction and exemption amount. So.
Perfect. Thank you, Tatiana.
Wow.
And I just want to, as we're looking at the website, it talks about historical content. So as you look at the IRS, some of the pages for the IRS, please keep that in mind to the attendees as we tell you to go to the IRS because some hadn't been updated. So thank you for sharing that it is 12,000 that it's gone up to this year.
Thank you all both so much. This information is really outstanding and so critical, and I think really identifies the need that the need for us to have FIDA services and how important that is. So I need to get to our last slide. So I know we didn't get to everybody's questions, but hopefully we got to many. So please join us next month. The presentation is going to be Building and Improving Your Credit Score, the Importance for People with Disabilities Seeking Employment. So that date is going to be Tuesday, February 12th, from 1 to 2 p.m. The registration link is there for everyone to go ahead and register. And please take our survey that's going to pop up on your screen. Your feedback is very important to us. I want to thank Tatiana Williams, and I want to thank Michael Rausch. Both of you gave incredible information today. We thank you for your time and your expertise, and have a wonderful afternoon, everyone. Thank you.
Thank you. Bye-bye.